Welcome to this video on the losses of the ECB and the Fed. Normally central banks make profits which they transfer to finance ministers year after year. But in the past few years they have bought a lot of government bonds. Central banks have paid for them by granting banks balances in the corresponding amount. Because policy rates have risen, the central banks now have to pay higher interest rates on these deposits. At the same time, the government bonds they bought years ago are yielding little interest. The interest rate margins of many central banks are negative. The Fed has already accumulated losses of $50 billion since September. National central banks in the euro area are also expected to post massive losses this year. Losses can be so high that a central bank ends up with negative equity. Nevertheless, a central bank can continue to operate. After all, the ECB, for example, never runs out of euros because it creates them itself. There are numerous examples of central banks successfully surviving even extended periods of negative equity. What matters is not their balance sheet capital, but their confidence capital, and that depends on their ability to keep inflation low. They can do that even with negative equity. If central banks write losses, they cannot transfer money to finance ministers. But the profits of the Bundesbank, for example, have accounted for only 0.2% of government revenues over the past 10 years. In the long term, the US and European Central Bank should return to profitability. This is because low-yielding bonds are gradually falling off their balance sheets. At the same time, the share of cash in their balance sheets is rising, for which central banks do not pay interest.